Yo. Welcome to Sikasem and Sikasem program near the Brono, a high life radio, and Utie, your boy Patrick Befi, and send you see no, a housing or mortgage, Mojuma. A train ya Alex of the Bana, so I'm so quite so bano. Best starting near the Nyama to 2 years and Sana or Baby Drew. But before then, we should be kakra fa state and Nyama Sequel. When it comes to interest rate, in say interest rate a change kakra, interest rate a change kakra, Fed at interest rate no so kakra. Iti na expect say in say we bring expect say Fed interest rate no so I say na ye ho aba all of a sudden I say near change ya na take time kakra, and e ba become mortgage specifically about mortgage, and then maybe should that come one set. You know, training Alex na say Ebeka mortgage about how the state of everything that is happening, especially when it comes to the interest rate and the mortgage. Say nneɛma bebree change. And say your friends say interest rate change na the so many things about Mr. Mo me ye kakra bi wa ha mo twɛn me kakra wa ha na wasa me ye send away. Okay. Yo. Okay, so before then, you better questions. What question be about finances? The idea that the be about finance no. Me the your friend is saying, me the link need to chat. No between your friend, I can once the man sana you started. And also between the question be to chat. Episode to between the two. So between the two way no soon. Now you can once more question. Be any question before we go on. Any question. Link na me de abano. Eba. Okay, link any. Link number. To question bia and as so fee say untimin dialing up with the two your friend is saying. Chat musua and also nearby and sana start you win. Sometimes yana questions no so here. It me boy ma yet me baba because yana let me see 1 2 3 so me come back come the become okay, here we go. Okay. Now, okay. Obi a question be a bit to me abisa for anything about finance, and Sunny started program no. And Sunny started with no question be for finance home, person to dine, person to car, person to be a bit maybe answer. I train ya also we how within the next 5 minutes, 6 minutes. But before then, question be bit me abisa, and Sana way. Way. Okay, yeah, sure. We say so we be about consolidating question. Yeah, in train kakana amount for sumra na fee. Yeah, fancy so credit cards. Okay. Yo. Any about could be say consolidating your credit cards good or consolidating credit cards good yeah, it depends. What it is so credit cards now and that's all credit card bills are the pay, and here and yet the consolidation. You go so be consolidate because sometimes you consolidate here with different credit cards, right? We be at 3,000, we have 4,000, 5,000. You combine all together. Because sometimes we really fee because it be a cards in the door. And you know consolidate maybe I would be a loan from baby. Now what the yes, yeah, bad, but the thing is won't change fee. So if you say be a work consolidate into what change be and yet true. It's usually yeah, so focus on the pain. So focus on the pain now will pay all right. Now that consolidation but now sometimes we are interest rates now be from the loan now the credit cards no. Yana a no cross form. There's nothing wrong with that. Yana is very good. Math wise. But the when say nipa we be consolidate here. Focus on tua can free on. And that shouldn't be the main focus. The consolidation itself shouldn't be the main focus. The main focus should be say utiaden. Utiaden and here. Yeah, you move abroad my try and try see utiaden you consolidate yeah. And there's a difference when it comes to utia debt. Now we go through the process of utia. You see, woman easy utia. You don't feel any lesson be is consolidating good? That's the question. Consolidating good. My name is Patrick Berfi. And I become mortgage to answer, but before then, a question will be the question by answer. I'll say is consolidating a good and I'm mentioning consolidating yes a good, but focus on the debt paying. We focus on the debt paying now a better. So we because yes, and you could see say consolidate. You won't see people all the time. I'm out for consolidate. No major at all. No, as I started different credit cards and I say, different car. And then sometimes you consolidate now if you want more, any lesson be a home. And it's easy so best go back. Sometimes we go so grind through the process. It's here while we say you won't even go back again. Back so that's the whole idea about consolidating. It's not like it's good because like I said, sometimes the interest rates no crana it be a credit cards sometimes credit cards are outrageous. Say on average price about 23%. Now if you are consolidating now obinya for instance 10%. There's nothing wrong with that. But the who said many a times I'm for consolidating we are now obinya bulk maybe a credit cards in 20,000 or 20,000 or the TF or to be the 20,000. All of a sudden one say we jai 20,000. Yes, but we minimum ni be. Now we started say edge credit cards be. And then consolidation a year very and I would say focus on the debt more than the consolidate. Focus on the debt more than the consolidation. I share another one. We say Obi say so consolidate here. Does it hurt your credit? It's not necessarily. You two ways when it comes to debt paying. You would debt consolidating. Your friends say debt payment reprogram. No, the process whereby say Ujama Ubi Ujama company debt companies be no more try some more yama. What it is the first year they will trash your credit. And as had a very simple what they do is they tell you not to make any payment. It's one year payment for a while on your credit, with the credit card, with the car, could be our dinner animal. 1 year payment after a while now. It goes to collection. And that company it goes to collection almost selling with dollar to a penny. And after let's say a couple of months, and then a couple of months, maybe 6 to 1 year, no more companies they are 7,000 now. The other company be about 500 into 1,005 grand okay. But since I now need payment, need to say debt your friends say credit card. I bet trash your credit score. I bet trash your credit report. Now credit reports no information about credit reports no or they combine your credit score. Definitely your score is going to dip down. and there no two ways about that. Men try so yes I don't know. Say we will be all depend on the credit power one. Now say okay yes debt your friends and consolidating programs now. When they say credit score there is going to go trash for the start. It's while between is also the same thing. All you got to do is stop paying all the debts. After 6 months to a year, almost the call collection, collection for us, very cheap. If you call charge off account near there, it's very cheap. Then almost so applicant if they come almost on 500, 7,000. Now they can now almost on $500 almost 1,000 crore budget. Hey, it's no saa way for no mama we are no mama would chase can go on the first year no would scan go on ma obi anywhere omo ntua wo omo twen say ebeko from na from money company na ko deal idea wa betimi ay the same thing ehun hia say obi go through mo no mo start so mo no kasa o be renhran na the meeting betimi ay am on say na enyi through mo nya hwe the process na tisa omo nya bibia process no and tisa it no usually no wofi say be omo boa na say omo try so omo negotiate it's true omo negotiate but whatever they are doing no will be to me the same thing to me how say o de kwakoma any that if only be a mama is the next question saying obviously the advantages of consolidating so consolidating and advantages is the one as a cat in the doors and I say bills payment no you are making a dose too much there is sometimes a rate me fee we're bringing in that together, bringing everything together, making payments. No, bad. You're bringing everything together, all the debt. Now about a year one. It be a loan, it be a credit card, it be a crana. I have a car loan room. You put everything together. Now, just one payment. We're training now because what you loan and now the one of the biggest thing, and most of the time, no, yana interest rate, no, everyone will form chain, you can say other payments, no, it's you can say loan, or credit cards, there 3 or 4, or car loan, be our personal loan, those things in to 30,000. Now, be on average in those ones, no, because of the credit cards, I'm going interest rates, no, and I'm 20s. To combining now crown a 15 with a personal loan of 5 interest of 5%, 7%, no brainer. Yes, that means on that side no yeah we and sometimes because say credit cards no a different no you making be 2 credit card will make you 500 100 waha 200 waha 150 waha say training na sometimes if you are won't be payment no it's easily say beg get you into so one you're very serious, one you're very technical, one you're very intentional, one have be could deep down or debt will be but consolidate here maybe an payment now no combine within a month no a baby if I say be a baby 900. But since I will put everything together, we usually be sometimes not payment in cry 500. It is that wow, so we are serious. We decide 900 in our craft so. It will go on after we every item. Already so interest rate no so be a form. The combined interest rate and now we share with the other side no. Now it reduce. The advantage is a woman obviously, how long is your credit bad after consolidation, after consolidate credit? Because certain American, if you miss payments, most charges accounts no go charge off this money we make it dealer. It's the same as like 7 years. BAS information stays on your credit for 7 years. So for 7 years, the be a new 7 years nankasa we start to say we payment near there. The credits invest start to say bumpy up. The information, those ones will be a core charge off and I say core collection. This animal, even though what you are, it's still going to be on your report for 7 years. So bad information stays on your report for 7 years. Good ones for 10 years. Because the good ones 10 years grants be account to be na utua ne kama ana wo loan bi utua bibia kama free so ama bibia watua wi na loan wo ho na it stays on your report for 10 more years and sana drop you off. The same say credit card be na watua credit bi na wo ye free on ma it stays on there for 10 years and sana everyone. Yeah. Also bet me the question about and also bet me a dialing and the your friends a link not to question be episode dialing now bet me a dialing. I'll be say is credit score credit card settlement a good idea? It depends what it is. If you are behind your friends, definitely before say obey your credit, your friends say obey your settlement. That means you're already behind. As a name honum. Now be our solutions near there. Settlement, say the American, that means why payment, one year payment for a while, and we'll try to say will be tria because it's your friends a good thing to do. OJ and opposite tria. Usually in settlement in a form, almost 18 now or in so say we a settlement. Internet show say be owning credit be say definitely now already that particular account maybe an attraction already but still no bit me wow ultimate if you on there are two things say odeka na untua na collections and I say the other one is say account and a core collection but which is up to date but still on collection a core collection so ultimate a free settlement even though basically settlement that means say a call that position not say where you free on after a while no wow ma ultimate it says Obi say how can I improve my credit score after debt consolidation? How a few things I'll be to me as I start as I build a credit beam to bet me I get secure credit because now no it be only few be some person and we all know how secure credit is like we start to build a credit beam. So you can start with going to maybe your bank credit union now secure credit or seek another to her either some of them a credit card form or a loan form. Most of the time it's a credit card form. Now we say using as a credit card like do a day amount credit card but meanwhile a wasika until you sue now you sue ye on baby as said you use credit normal report to the credit bureau. One of the things a bit me abua I mean to be say who are get in touch with the reputable credit repair especially and said the mechanic so credit repairs and this and we still number june a look how already credit is trashed so we start sell build it start your first say they will start your building and credit card companies secure credit now we try to say we start to say we catch up with all those things other bills be a honest animal na app because why we consolidate here we say the mechanic host them or try say we take care of those money already at the same time also will clean be a credit secure card more reporting as like a credit card itself and you go on all of a sudden after a while but some of the stuff will not fall off right away so the mechanic it might stay on your report for a while if you between at our credit report so for say the mechanic 7 years mostly in debt relief programs you're very careful your credit card your credit score and I say your credit information will be trash first now credit information is any DJ where your friends saying editability your credit score if your credit information is bad definitely your credit score will also be bad. We say what is another question here? Which is better, personal loan or debt consolidation? Which is better, personal loan or debt consolidation? Debt consolidation. Say you're trying to put all your debt into one state I'll be training everyone. To me, I think so where the interest rate interest rate a good here. Some banks only the reason why you're taking the debt for consolidating your data. Some of them no be that obi okromitimi yes or for the listening now, but maybe be no more send this kind of call. It be also this kind of amount. Na either way, that's the whole idea. Me crowd in Kombayama, I know yeah, because can me to them. You see me broad no ska to them no what change kakra. If you are hot that let's cast have to say all of a sudden na okwakufa ukoyi a friend saying scan free one na fe a different situation yo say banana de ko say yenu adru so still nri channel. Hold on, share another question. No be sudiba. Question be any will be or question be to chat na ebetimi answer ma. Question be any in share minutes or beba we say balance transfers and a balance transfers were here. Balance transfer most of the time what it is be our credit card be na loan be a was no interest no was so most balance transfer no go be a first 12 months 24 months a free. It is all transfer your friend saying or debt na the other credit cards no bahanoma when you're free your friend saying when you're free for maybe 2 or 3 months and 12 months 24 months. That period no go is smarter because remember interest rate na cost no do a house especially scan with chikakra do 11,000 na say utia now be 23%. Imagine you paying about be 300 a month or so with that 300 a month so can you be now 24 months for free no interest rate then so 300 na betos no which means they add whatever payment I'll make now quickly what me a year for and I say at least with me I'll bringing down and sana if your mom would no interest rate na kicking but sometimes the thing is one share close the first 2 months so first 24 months no no interest free or interest free or no interest for first 24 months right after that maybe be 20 something percent. So you have to make sure you check all those things. So you transfer now, make sure say we say make sure back say or say I'm saying first 21 months zero interest 21 months. After that say ebekosro me hu we need after that the bit me akosro very very high. And name say so you bet me a try to bit me a study a year sana waba. And the topic na you become one seven nankasa. I can be say me try one more time if you answer. Topic no a topic no mortgage. It's more about mortgage. Okay. So what does the Fed interest rate cut mean for mortgages? What does the Fed interest rate cut for mortgages? And I want some near Beshaka. Now you train you na or near Abeka. So them kind of question be out with me jaba. Na yeah do home come on. Yo. And share question be a besaba be na yenye ho ejuma. We say, what are the strategies of paying debt? What are the strategies of paying debt? Strategies in Benny and Befasua, a bit me a pay debt, a bit me a pay off debt. There are few strategies a bit me use to pay debt, but usually, there are two are standing out. out of the two, no, your favorite two, need good, need good. The only difference is say, one, a little bit, me say very effective. So the two ways and strategies are pay debt. One year, the avalanche, and the other one year, debt snowball. The avalanche way of paying debt, no, whereby say you take what a debt of therefore for yes, two credit cards, two loans, na osha. What start so we are aggressive or the one interest rate na was through. The one interest rate was through. And he say four payments, if I say 4 credit cards, and I said 2 credit cards. One credit card is 3,000. Interest rate also let's say 5%. Another credit card of 5,000. Interest rate also be 4%. Now will be a loan of maybe 60,000. Interest rate also be 9%. And we will another loan of maybe if I say 30,000. Now interest rate is 6%. All right, the avalanche star, not just say, I was saying started to share the 9% one and the interest rate more high. That means I was saying started to share 60,000 first answer. It semi 60,000 no. In fact, 60,000 no. Every month be an 500 or 60,000, 500 or 60,000, and 30,000 every month be a mitria. If I say 400, if I say 300. 5,000 on mitria be a 120, 120. Now 3,000, which is 5%, no mitria be 100. Also, all right. That means I was starting to the 60,000 first. Now I start to 60,000 now. If I say 500, say 500, because me 60,000. You know, the other say you pay every between 3,000 or 30,000, which is 6%, which you 100, 120 or 5,000, which is 4%, which you 300 or 3,000, which is 5%. It's me training area. Adam, Misika be a mini be emphasis more extra 500. To be training area, now for me 60,000, which you 1,000 instead of 500 because many extra 500 na me the account. So yes, a bit taking me. Your friend is saying, let me see here, 60,000. So me 1,000. A bit taking me 60 months. A bit taking me 60 months. And son me 60 months. And son me a bit taking me 5 years. And son me Be now me the call another one, which is the 30,000. And now 30,000. Now I don't know me 1,003. 1,003 no. A bit taking me another. A bit taking me 22 months. That's 23 months. And some me and we. The 1,003 say na me 1,003 no. Remember 60,000 na me 1,000. 1,000 and the no. Now I'm paying me the 1,000 and the no. 60,000 me no. But it says can I can the next one, which is the 30,000 now me 3,300 every month no. Now I'm being 1,003. It's now me focus now on. It's no see 23 months. 23 months, which is almost 23.7 something to almost and also 2 more years. It's not 7 years. No, 7 years, so that's what can yana hard. And some we are become 1,000, 5,000, which is 1,002, 120. 120 me come one. Menya 1,420 na me it's yes, a good. But the thing is, a kind of long. For almost 5 years. Now, untimi entry a cabin through one ma, it's me boo abem. Buhano abem bu say, oh, I didn't meet your crowd and say, any other. But guess what? So we payment. That's all of a sudden, will not keep it down. We say, more encouragement. Oh, yeah, just say, I would say, name because a big call, we be a few might be so abba. So, it's now in the snowball type no see na eno etie. You best start with a small amount first, which is the 3,000. You start with the 3,000 first, with the extra 500 there by become. It be tria make na now me 100 because me tria 3,000 me tria 100. Now me extra 500. It's 600 na me be tria 3,000. So me 3,000 me tria 6 months. Me tria 600 for 6 months. For 600 for 3,000. 5 months. No man knock that debt off. It's now no a kaba free, even though no amount no from a kaba free make him. Now me call the next one, so which is the 5,000, which is 4%. Here no, you call with the smallest amount, not the interest rate. So now me 3,000 from about 5,000 or so. 5,000 or so, we try 1,000 already. We try 1,002 already. MC Nyaba, we are ready. I know my when you started. Which yo, and then you good so. And they are debi na o say my no. We will have. You mame na me show mo say how I bit me debt na we eh. And it for in Alex Adumakwe Champon and in a year housing a topic what does the Fed interest rate cut mean for mortgages? What does the Fed interest rate mean for mortgages? And then they become now before so mine and I'm out for questions. May I answer I'm out for questions. I in him said che biano. Bro. Mami ma introduction kakra sana. In him see any mood so introduction kakra bi na fe. Yeah, starting free order.
Enya yetiefo ya na me insha mumuni anana that's for every any radio station every third week of the month say yes you say yemra na yemisuade enti se bi nya no we actually me did Alex Adomako Champon, be a real estate agent with Samson Properties in the past 6 years my lances were both Maryland and Virginia enti Madam Asiatifo say emre nyina no bosome bia no moma ho kwan na mo se madagie na se mobetie
Yo, you know that's bebree. In say nche bia na hu say Fed ebe reduce your friend saying interest rate. Na hu and hu say hu na mpaso say 18th, right? This month 18th was the same.
17th no.
17th. And ampa omo kate. Say ni na kra adwen say the cut no kra na be 2.5. Hasini na in say be 25 be buy call. It wish I say your friend stock exchange na omo nya adwe say na ka begin omo ni jo how we say that dey no mbufu stock no cost afi as our tia before. Anyway, any who say omo dey aba ampa omaye. Meja no aka bibi kakra bia fa ho ansa kra na yakomo gigi so ho. So hwe senior AC corner na omo kan no senior osi hwe experts and aso makra no hwe Fed chairman no senior osi chair so just say ebi kra betima say another cut kra ansa na year na end. Dia kakra na wo ka fa ho kra ansa na yaka mortgage asema kansa.
Na medasi said the wo kan no yetiefo said the wo kan no yes Fed no said the omuhia 16th and 17th meeting no they realize say monetary policies na say nyina anim na say our system na musika sem na federal and as a central government na independent body from time to time only review the economical situation and they make policies affect nyina day to day your living and also businesses. To say the okay, how much is inflation above from not to their target, but it's getting closer. And one of the things I say, obi baby say denti current na ahano interest rate ni ye twekosro anase ye tweba from. But just say aka one some kakra but ni tietie mu nyina ne say anytime bia na aban no before say ABS kasemu ago na obia kɔbɔ besia bia no nese ehun si hun no form the essence is a inflation ama nyoma boy de ne nti saa na yehu say rate no war form no COVID years ne de ba na because over in the US record this is the from before the COVID that the longest in US history aban no ejai the interest rate no to stay that low and in a record and in terms of even COVID years no has been the lowest of the lowest because prior to that na low already na COVID ba no pushing more lower zero that means say bank for no ko bobesia e wa ban no ho a isi hu bi ani ho and omu nsi hu omo gin free mi no na free chop nti na banks no mo sika no nti aban yes I feel the inflation nyoma bo say the na say e ho aba say so mi do mo sisem ene so omo tun the cost in the past 2 years na no rate gina na so no mo sisi ano edwedi nom di na sisi rate no so no ama I say economy no so na chase take it on it. Things are becoming very expensive, and yes, and so our businesses cannot hire as much as they want. Immediately now, they won't raise the cost through now. Now they have to make sure that they're losing the monetary policy. That is cutting down the rate. So they necessarily loan beyond na ehunsi uno for ma encourage na ya spending. And typically, no, this rate cut or mokati there. Wamokati the Fed funds rate. They call the Fed funds rate now. And only yesika say bank no kwa jisika no ewa ban no wa. Insi huo mu disi ho de mo. And say bank no ekoko bobesi awa ban no ne say or insi hu ne dos dia. Na ne so mo beto ama minu no so dia. Or so mo so insi hu ne den. E was. Nti eno ne die sisia no aban no ahwehwe mu awe de wakati no because before mbekati na I think say it was 5.25 and the sisia no matter so a 0.5%. So now no depend on the day how you are looking at it, you can say the Fed funds rate and as a bank no ko bobesia now is 4.75. Translation is sisia no our makati na and no affect short-term interest rate, which is car note, student loans, credit card, personal loans. Loan be a short-term, 5 years, 6 years, 7 years, 8 years now. And no necessarily a buy no idea akati. Now indirectly, no so munya akatia the Fed funds rate and as a bond market now, and no a control mortgage rate, translation is a invested read into it okay say sisi abana meskasema yefuna yen adwumafo companies be make free money there. That means their business is going to boom, and if their business is going to boom, the translation is said okay earlier stock market will rally, and if it rally, that means the companies are making profit, and so they're also sharing with the public. And you can say your cutting rate na say na kana enokre internet say enono side in there ehun susanso a ebenya any short term interest rate intisia no enuanom be hu say sisia no ukọ bank or credit card interest rate say adjustable rate you see say now no rate na adjust from loan be adjustable bia no sisia so be kosoro no ana ebegina be bigina na o say eso ye den eti na akọbọ besia kotoka rate be from credit card bibia no affecting because abano atiso
yo minia yen focus on yeah the end so has to say so what my general and broad knowledge about the whole thing no now you said the okano mortgage cry na bibisa so say na interest rate na ekofom no because me dey and say time a hu say as a mortgage Fed bet so no all of a sudden we say mortgage rates in price na no drop that and na say no ekofom kakra answer it is say no say na mortgage ya started to see what can be kakra bia fa ho Send a bear affecting one, a bear affecting me already. Me what my mortgage mono. Obia, sorry, Obia Baby to be fufrono. Sena, send a bear effect ben benya wo. Me and my baby to fufrono.
Yo, Nana, but I think that the effect, has been taking place gradually, because since Fed, or on back interest rate now, there was already no anticipation said or Bekati, and through that now, people started taking money from the bond market, because bond market also is a form of kind of stock, and so people put money in it. Be a 2 years bond, 10 years treasure bond, and your 30 years treasure bond. Then you know do sika koto ha. And also the more the bond numbers is going up, the more money you are making. And the Fed rate now, people started withdrawing money from the bond market, because that means a call for more music as what. And they were waiting to pounce on the stock market. And before then, you realize that, like you said, now rates started going down already. And since you know market, an interest rate, as you and I are talking, and agree now, interest rate is sitting as 2 years low, which is like last year around this time, our rate was in the upper mid-7.
Yeah.
And the interest rate is sitting anywhere from lower 5 to lower 6. Depending on your credit scores, any loan program, any lenders. Say lending there, buy no any share, BB say lower you can go, you know your profit margin. But in terms of the highest there, there's a cap as to how high somebody can push it. And like for instance, 2 weeks ago, me lucky will be for government loan, which is FHA. They got 5.25. But FHC now 5.5 is more of the average in today's market. It fluctuates. Conventional loan, for instance, I mean, depending on some banks, you can get as low as even 5.5, but you have to pay some point. But typically, 5.875, 5.25 is more of the conforming rate. And if you do high balance and outcome jumbo, then you're talking about the 6 or possibly 6 and change.
No. Yo. So now, Ubi Obem Fufron, Bibisa. It is saying what advice, what would be your professional advice? So experience at this point, this see a mortgage and now your friends a real estate see corner at this point, send marketing in stable in your messy corner, you thought that he'll be over experience in yet. My uncle be a for experienced people, because at this point and be a DD agro. I know say you have more experience, you are very passionate. Your experience, say if I was at the back, sitting at the back, semi trans interest rate back for na say ya teso kakra. Even though affecting it directly, because now start take from cry no. Dia sana be catch me. Say still maintenance say entry and I say e be a better more and I say mentor.
That's a very good question, Anana Ubisa, and I get it all the time. I think it's timing everything, not just even in a home purchase, but when it comes to investment in general, especially investment that has up and down, it's very difficult to really time. Yes, in certain type of investment, like if we're talking about stock market, if it's going lower, then you buy the dip. But when it comes to real estate, it's something different. Especially with the home prices now as we speak. And I think that those who are sitting on the fence are, at least compared where we are last year, there's a big break in the horizon for them. Because last year, if FHA people were getting 6.5 and 7. And so if you can get FHA for even 5.5, you're talking about a whole point. It's across board. You're talking about half a percentage to even 1.5. Somewhere usually people put the average, but depending on who is your lender, and everything. And I would say that those who are sitting on the fence I think now it's time for them as an opportunity that they can afford more, because the lower rate is for one more person said now you can afford more. Like if in the past, same income at the rate of 7, now you could qualify for 400,000. Now, if the rate is 5.5, I think you should be able to qualify like even close to like 450 or more.
Yeah.
Depending on other factors. So I think that yes, it's a good time in terms of those who are sitting on offense. But like I said, you date your, interest rate and get married to your home. Because if you are sitting down, how low is are you considering to go and then I can say, oh, well, this is enough. But for your listeners, unfortunately, from last year even to now, depending on your marketer, home prices have gone up. Like,
yeah,
I mean, there's a home I showed to somebody in the community in Northern Virginia here. It was 480. Last week, I took somebody to the same community, same home, same end unit. Now the price is for 550.
You kidding
And
me?
up going for under contract for even 565, which I'm here to know whether it's going to appraise. So you do the math from that last year till today. So if somebody had bought it at a higher interest rate, yes, this year they could refinance it or in the future. But guess what? They have not missed that equity that
part. Yeah.
And I think every situation is different. You look at what works for you, but until, like you always said, now, until something catastrophic happen to the economy, home prices will continue to grow at a modest pace. Yes, in certain zip code across the nation and the counties, prices are kind of low, or there's a lot of homes, but the story in DMV area here is different. Our market, we are still dealing with supply issue, even though it has improved from where we were last year. I would say if you are ready, which is like we always talk about affordability, if you can afford it, and you also have a secure job and your emergency fund and a community you like, or it works for you and your family, then you are ready to buy.
Yeah, deɛ ɔha nom. Sɛ yɛhwɛ sɛnea nneɛma si kɔ sɛdeɛ yɛka no, sɛdeɛ bi yɛka wɔ sɛ usually no price of houses ankasa deɛ yɛntaa nkɔ fam. Just biribi paa happen. Into the on that side no koraa. But yɛhwɛ the interest rate parts no koraa. So if say meda so te ɛhɔ sɛ metwɛn sɛ ɛbɛkɔ fam a, what are the risks? Ebi ebitumi asa akɔ soro.
Well, I think with the rate aspect there, it's safe to say with the Fed has pushed it to upper trend, right? Upward trend. And so the trajectory we can confidently see based upon even ENDRA, the inflation reading that came up Friday, was even encouraging. There were some missed signs, but the Fed targeted rate, Fed said they wanted 2%, and I think that there's a model, because they talk about this and that. It's safe to say that now it's sitting at about 2.2, which is close to where the Fed wanted to be.
They want it to be,
So unless in this month ahead, everybody with the hope is with this a little bit of improvement, people don't flock into the market. Say if you are more rush, if you know so, say cars are announced holidays eBay or my credit card in rate to conform, me way a conform, and they can be there and just begin to spend. If inflation all of a sudden, will begin to shoot up. Then the Fed either they're going to stop where they are, or there's a possibility, especially with a 10-year treasure bond now, and it's based on psychology, based upon what the Fed is saying, what they are not saying. It can go up anytime.
If cemetery, yeah, the kind of say, let's say, old person say, why you ready kakrana? And this how tanta who be brave, because so tanta who be brave. A bit yama, say be a nyama change, which it could. Say nyama change, it could. A bit yama, a bit crana, a sako subi. Patrol, Vivian, no question be na.
But it's a Tiana, maybe
Okay, no problem. Yo. And then say, who did you agree? A bit yes, I could be.
I mean, any particularly from what all the analysis and everything that we are looking there. Yes, when it comes to the Fed, or Quaco increase the prime rate there, they are not going to increase it. But when it comes to the mortgage rate there, read on what the Fed body language, which is if they realize, okay, people are spending again, and inflation is not going down as but rather it's creeping up. Then there's a possibility that mortgage rate will creep up, definitely. And that's why I say in terms of some target rate, in there, it's very difficult to say target, but from all indication, I know said raising the past 2 years, or much as a cutting as well. The trend should continue.
That trend should continue.
Yeah. If all the good things that they want to see, it still happen, then they will cut it. And I will not push. Say we're going to see any upward trend. But there's one thing that is certain. Say in terms of prices, nobody can put brakes on it.
Because say Bibi happen say the cano, which a bit me happen say I'm a full fee say be interest rate from kakra easy credit card now an interest rate or credit card to be a from kakra na we are maybe an or long term plan be say be crana so change in the house and also sort of house now when you kakra ban the pocket him near there it me flock a bunny people out there so more pet your friend is saying mukwakupe dan ato ana bibisa na asa akwa ha pese 2001 2022 etimi change ni my economy ni kra change nti wona pese mu say bibi aba se ne osi change pese o say sometimes ni anu kwa kra ebi o mu ti the way anema kra si cost na even Fred kra nya nto ade kra na enu akra no etimi e ma ne cost kakra yo I say your question be before say you be try the so no ayeni abrefi shout out to you or say is it a good time to refinance or wait? In your Sarah Ama, I'll say good. God bless you too. You said that in Amisha also. We must shout out to a few people also no more but also chairman to say is it a good time now, which is a question and I'm trying to say me to say me Timothy me to 2022 23 said that time no 23 especially it should too very way up me were baby 7% and that's a 6.9 and that's 6.75 is it a good time to refinance or wait in your
yes I would say so for refinancing I would say wait because the action has just started. Right? The action has just started. And that because the reason why I'm saying wait is that refinancing, as anybody who is a homeowner knows, that and you're free. They come at a cost.
Of course.
And so I know people they have 7.5% and now they can get 6%. Right? Which is almost dropping by a whole 1.5 point. They ask me, Alice, what do you think? Do I have to refinance now or wait for later? Or there are people who have 6.5% and they have good credit scores, conventional loans or FHA, they can get something under 6%. And I said, tell them wait. Because the reason being is air corner, we're going to have it, they're going to carry it for some time, or the bond market is going to sink and rate is going to come down.
Let's say
What if you know one said, well, yeah, and then if you walk to your then then do you go back to refinance it again? In terms of refinancing, there's no limit on how many times you can refinance. But you have to know, say, each refinance comes at a cost.
Yeah.
And for refinanciers there, I always tell them, say, hold on, let's this year pass and let the election at least like summertime now. Because once whether continuation or new administration based upon what the economy will do, will determine more moves. And that is be my answer. Say refinanciers should wait on for the moment.
And looking at things, it looks as if the trajectory na econo a good kakra. It at least what we have for the next year, dear, between read kakra, cut kakra, be as I become. I'm say refinance and I'm say wait here and you're bad. And I sometimes try to because sometimes say if the interest rate, the interest rate in a by the closing cost, now share the amount now. One have to share for the closing cost. Now we the check and balance, and now you difference now. It's always good to refinance also check us any money now. Because if I say me refinance it, that's a rate of if I say me 5 or 6, net the may could be a 5.5, right? That's a me closing cost about be a 12,000. That's a me calculation difference now. Every grana there's 7 years now, so be meet me a break even and son must start to us, and I may go too far. My calculations are too much. Now, is it okay to do that and son worry finance? And I say,
no, so very good contribution from Nana. One of the things are when people call me for refinance, you have to look at your short term and your long term goal, right? So what you are saying now, if you have a short term goal there, then you have to sit down to assess the cost, right? But you have a long term goal. Into microfinance, I'm going to save $300, which is very good money. But how long am I going to remain in this loan, which is the new one I'm going to take upon myself?
Yeah.
Am I going to sell it on my next move? Am I going to rent it in my next move? Those are the questions that one need to answer it. And so for me, either my past clients or friends and family members, if they call me and they say, Alice, I want to refinance or anything, these are some of the questions I ask them so that they take those things into consideration. Because if you are going to refinance it and you know, so I'm going to sell it, and at that
within
time,
2 years,
must spend $10,000 and I've recoup only 5,000, then it doesn't make sense.
Okay.
For you to do that.
So that means I'm not overthinking. They make calculating. They make them say, yeah, we finance now. Yeah, okay. Yes. So check this out, man answer. Okay.
Yes.
Sarah Mo say Alex is the best rater. We love you. I guess Alex love you back. In your brief, you say a follow-up question. How long will the rate go down based on expert predictions? Oh, how low? Okay, how low will it go down? Based on expert predictions. Over to you.
Well, how low?
How low? Say, yeah, I would say. Okay.
No. How low?
I say based on experts.
Based on experts. Yes. Yeah, so experts. I think that even if the Fed himself, chairman, and I say the voting members, none of them will be able to tell you. They can tell you their goal, but their goal is going to be driven by data. Right? It's just like nobody anticipated 2022 in October, interest rate was going to hit 8% for mortgage. Nobody dreamt. But based upon what is happening now, the Fed allow it to happen to achieve their goal. So how low nobody can put a cap to it, but I'm thinking from all that I'm hearing now, on the average, we are not talking about anything. They are shooting saying interest rate is going to like conventional loan, maybe end of next year, that kind of thing should settle in the 5, right? And the government loan, which is FHA and VA, always that one is lower than conventional loan.
Conventional loan.
The reason being that FHA has some fees they charge you. So for the trade-off, the government give you lower rate, which those kind of fees also offset some of the government costs. Same thing with the VA, the military people, because they serve us, you and I. Government has given them a special privilege on their loans, but still they also have a fee that they pay. And I know, sir, we're going to settle somewhere in a 5, but it can even go lower than that, because I think that if they maintain the lower cost now, if they see that the economy is deteriorating now, quickly, now I'll not be surprised the mortgage will be looking at something in the 4. But how soon we're going to get there all depends on economic activity. Because
the name started to
yes, because like you said now, people were spending quarter and they hit us with half. So that means that in this October they might not cut. They're going to give us briefing of the outlook. I'll be surprised if they cut October before voting. It's not going to happen.
I think so, they said their next meeting is November, right?
It's November. So, no, but every month they give an update.
They give an update.
Based upon the inflationary reading now. Yes, the PPI, the CPIs.
Yeah.
We're going to start it from, God willing, is it Friday? Yes, Friday we're going to have the job market.
Job market on Friday.
Yes, Friday we're going to have
the 30th.
Yes, Friday, so Friday usually that's the first
Friday of the month.
Of the month.
Yeah.
And it's going to happen this Friday.
Yeah.
And so the job picture is going to speak a lot, whether there was growth, there's stagnation and those kind of things. And then subsequently, they're going to give all the PPI, CPI, wholesale, and all that. So those kind of things, they will get it before November meeting, and that is going to guide them whether they have to cut in November after the election as well.
After the election, yeah.
So, but they've said, most definitely, we're going to have another cut, which this time everybody knows it's going to be a quarter, not a whole point. Not half again.
Not a half again. Yeah, sure. Because based on the workers' expected predictions, we say 5. No time na econo. Starting say econo. No be any say beko 5. Now still no. Experts no were predicting say oh any omo mane nkosa. Omo mane nkosa na eko. Omo mane nkosa.
And the reason being is that one of the things that the Fed has been late in some of these things because people were hoping they should have cut this thing in their first meeting.
Yeah.
Like last 2 months. Right? And so that's why the Fed psychologically they make error until they want to compensate for the last time.
That's half straight.
Half to compensate it. And they've done a pretty job. The economy is not in recession. Recession has been called for the past 3 years. And so they realize that if there's one in the making, they want to prevent it from happening. So you're going to see now people are going to be out there shopping because their credit cards,
interest look for but the extra 100 say I 20 say 8 or to shoot. But what they say could be I will follow up question be now also the tomorrow ya but maybe feel say the whole system, the economical system I think say it change. And I'm from person better say change because we share nyama bia first nyama kitikiti bia ka we say na we are jagun they say I said nyama change kakra and just first ni bi ba experts no still they keep on using the previous na me feel say no so na ya sometimes a man hard drink kakra said you can na ka say fed cut we no crack that but based on them said the man for can I say I said amount for economic and history more history in the past near the atoto said you can because yana predictions ni hoke yana nya adwuma sa tie kohwe ya ayewe near the abaye anyway okay shout out to our friends Lily Winfred shout out yo obi any question bia e betimi atoa ye de no so obi question bia na all right and shift GS kakra bi ne nhwa ade so at this point said the okano me and sideways and that's will be cry say be and you say why you ready no or prepare then to say no if I say me ho na pese me to house and bisa na me hu say first na say matia da kakra by as I didn't hear you dear na me preparation be na me start say me Fabia me credit score ho sika beto no dia na me nyese say obi ase afi no person owura game mu yes said why ready or ho we dey said why ready or to dey aka no ho asem awie ya e wo fie so ya kan e dey so awie se say no die ono afi na ko be real game no oja ya afi dey ase o say aba no dia no onye preparation be no onye towards buying a house right now.
But that's Nana, that's a very good one. It's very important that there are few items. One of which was one, or credit is up to par, right? If up to par, at least you need 620 or better. With that being said, it doesn't necessarily say if you get less than 620, that's not a good credit, but we can get you a loan, even all the way down to 580. But do I even encourage that? Like I always say, no. And in my line of career, I don't remember how many people have helped them buy a home using 580. When people come to me, I always encourage them, say, hey, can we do something about it? And that is one, making sure you're cleaning your credit. Two, you also have to make sure you are paying your debt, right? So you rather pay down your debt, whether 3 months, 6 months, 1 year. Don't go add more debt. Rather pay down your debt. And do not add long-term debt. Yes, short-term debt can be taken care of. Like, oh, Makoji, my credit card, yeah, we take a hit. But credit card is what could you a bit material. But brand new car. Why say in the next 3 months
60,000.
1 year to fear. It's not it's not a prudent idea to go say okay car note. No, don't do that. Because one we debt because and we because musika and medwuma fine. But who could take it that closer? Anytime I'll be a new account to be now, you take a hit for the first 6 months to 12 months.
Mm-hmm.
And son wash as you recover from the hit.
Because debt now they come.
Yes, and I always advise one, credit score, clean it. Two, don't add more debt, but pay debt. Mm-hmm. Don't go open credit card account when you know so fee. Because by going to do so now, maybe your credit score is 760. Before I realize now a tier from now I hurt you. And new idea also make important. Two, suddenly change of job. So we change your job and say a better job, and I say the same line of career, that is fine. But if you are making a major change in career there, then you also have to talk to a realtor or loan officer, because sometimes most of the loan companies will switch from one big career to the other, now making money. They think say with the qualified mortgage, and I say is it genuine? No. And this most banks want to see 6 months you on that new job, or even in some cases 12 months. And you got to be very careful. Say, oh, sushi job suddenly. Make part-time PRN. Ninano, or say we taking into consideration. And also in some cases now, depending on what I say we are 1099 and also W2 and so on. Also who said of follow taxes, right? Especially now that the year is coming to an end, you move higher taxes, nobody to fear. I'm not saying that for Sika Command some, but also depending on some of the programs, especially we realize that most people in America here, not even just in immigrant community, but when you look at the average income, super majority of the people now, they qualify for most of the first-time buyer programs.
Mm.
Some of them can even go from this first-time buyers program, like State of Virginia, more increasing. For family of even 2 or more, you can make $164,000, and you still qualify for the grant. That's a lot. Yeah. I mean, how many family and individuals make that money when you Google it?
Yep.
That means a bulk packet. People
programs,
now qualify for these programs.
Yeah.
Some of them are 120, and for the area AMI. And they qualify, but one when you not tax person no or the junk nyoma because she or create two small businesses be na some of the program especially at the one na a government need you know a Virginia housing or with 3 years taxes and what they do is they drill you down into almost drilling it down no almost so some of these fictitious write off now a honan I say well grant program no young farmer and now send a shift to no to regular about if any pan any all of a sudden you did promise us say we are first time buyers. Why we are not getting it? Well, you are not getting it because when I go file with taxes now, tax person right?
Because every financial taxpayers tax, sometimes me say back who about say me pay 10,000. Akoya de Ghana. Also the choir, me see a betro was a choir be faswa, me the many 10,000. The chairman chukra. Uvia no as Africa koi wanyadi.
Right. Yesterday we are debia you need beti in later ne. You or say the main very important. Say you shouldn't ye. Into better unye grant program ne sa anyo manyamana wa na wutu a down payment closing costs are fine. And found almost the W2 no more. Wait to make Lemunyamo Yasibian, only problem. But on the 10 and 9, no, woma Bosumi do ayenti or more taxes. And now watching. And then you're self-employees. And the anonos are also not or so walk yet with taxes now. So I catch it with tax person is a misro, be percent to fee. Into a catch it now on also Mukwaya or Befaso obey Yamana any day. Enko Bontiao.
Yes.
Dachi. And most importantly, no, the nana ne passion, saving. Very important. Say one, ukotufi now. There's down payment. There's also closing cost, and we also have few miscellaneous, which is inspection fee, appraisal fee, and sometimes radon tax, which is about $1,005 miscellaneous. Into ehun hia say wobetumi save sika na se de bia na naka wo sika sem all the de bia obo ho dawru no say wo make sure say wobenya kakra nso e de ato wachi se be ya utofie na say hosiesi o say bibi ni na say o say wodun sabom a watumi edun sabom. Nti these are some of the things I want to also say the preparation and why as well. Also prepare yourself emotionally, right? As you said, is this something that I really want to do? And I said, for 4 years, Miss me yebi. Hey, and we also apart from the market, also we hear the outlook. If you are me person, what is my goal? It's part of the preparation. The market can because but 120 years, and I said, well. At the I had the papa, but if you know, I say you are disappointed, right? And you have to know your goal. But I actually, Ubu just walk to damage in a yano, 100,000 begusu. Na wakuyidi akwe na adibi. As agent said, Metia are always going to be transparent with people. Said, look, nobody can guarantee your home value. Not even the president, to understand and know your short and long-term goal. And Sana, you jump into it.
Yo, a few questions will have but before then, I'm say the old can na but bakwa I'm say uja wumuno and pese be can say why you ready say o pese o to fisi yes, a good say you better try say be improve be improve your credit score that means you're paying down debt now pin said your kind pin new credit card but they about here said them kind this housing economy no and yet we the kind was saying yet fagudi we experience rate you can account experience we never of be akoya is no do be first client no we experience because the way I say near city because also you'll be all out there still it's very very competitive out there. Till one here cry near one here be you young call in your Sarah a few questions be Shout out to Sophia. So Sophia also had also a question, but you Sarah then. Bro, Alex said good information. I'm say I bet Adamako. We name. Or stay. I'm thinking of refinancing my house, but I got a hospital bill, which I don't want to pay. Can the hospital bill affect me? Hospital bill, I don't know with you. Also, be affected for a refinance.
The answer is no and yes. Note that before former administration, now they passed a new law. Now no, hospital bills cannot disqualify people from living their lives. And hospital bill, we bet me a credit card, we bet me a car loan, we bet me to fear BBA. Name no hospital bill. No, the reason why you got to know no is through collection agency.
So when Triana drew what they are, that's all collection.
And he said, when him knowledge into minim nipa situation, which you don't have to say the situation. We don't want to go into all that.
But say generalizing.
And he said, our knowledge must say, Meduamoka and one friend, that's a new credit report there. And then now we credit score the general and also.
There's
a collection for the fraud there. And then now so we need how we check your creditor. And then I'm a credit karma. And I said freecredit.com. Annually, no. You can look at it. The good things there, Credit Karma, they are doing fantastic job. It's free. Even though sometimes the way they make their money is almost advertising to entice you to buy product. Until free, do need be a misro, never sign up. And I'll show you the it's not going to hurt you. Until the answer is one, it doesn't prevent you from either buying anything or refinancing. But a collection there, then credit bill take a beat. And unfortunately, I had one client collection wipe away over 100 points. One collection.
Yeah, a bit me.
They didn't know.
Yeah,
they didn't know. A friend me, my credit score is very good. Or my say, okay. Then I dug into it. We have a conversation, and I said, perchance you, and I said, oh yeah, I remember I went to the hospital the other day, and I'm saying, okay, you hold on it. We pull it, and her credit score was down 600 and something. I said, she was really mad. I said, don't worry. There's a collection here.
Yeah.
So when I directed her, she settled it, paid it. We got it removed, and you can't believe her credit went up more than 100 points. It doesn't stop anybody from doing anything, but a bit to me, add the pure credit. If it dip it more than qualifying score, and yet you say medical and infamo, but because of the collection, you don't have the qualifying score. It can hurt you, can be yes and no, depending on where this hospital bill fund is said to be.
The same person, one question Sanya Kusufaya was say, is the closing fee always 3% of the loan?
No. Closing fee is normally in Virginia here is between 2.5% to 3%. In Virginia, 3% is the average or the max. But other things can push it up. Because let's say, same down payment, same credit scores. You see, my 5.5%. Oh, there be medium percent interest rate here, 5.25%, and I say 5%. Where you have to pay point.
Buying down point.
Yes. So if you're 500,000 now, most of the time, if you what the 25% to us, 25,000, 20% to a 5%, definitely your loan amount is going to be, how do you call it, 475.
Yeah.
And when they start with a point now, first point in which a quarter of a point is equal to your loan amount. So your first point is going to be 4,700. And then the second point, which is going to make it half a percentage, they usually charge you more. As you go lower in point, the more expensive it become. Until before I realized.
Oh, really?
Yes. Yes, that's what it is. Until so one would think, say, oh, so my first quarter of a point is 4,705, which is the loan amount, and times 4. No, it doesn't work like that.
Oh, okay.
The deeper you go, the deeper the point.
The point, okay.
Until your first one can be your loan amount, but the second one can go maybe 5,005 or something. Until that can add up to between your closing cost. And that's where it's going to push your closing cost higher or mine, because I'm paying point. But then yes, idea Virginia typically is 2.5% to 3%. Maryland, the lowest closing cost in Maryland is 4%.
Okay.
It can go to 6%. The Maryland closing cost is higher than Virginia.
Yo, in your back as well, say, would two jobs affect buying a house?
Yes, 2 jobs affect it positively. In that, if while saving money meaning also for 2 years side by side, then it gives you more purchasing power.
Yes.
But in a situation where you've done it for only why back 1 year and why back 6 months, and that's less than we are, they take the highest of the two and qualify you on it. The only exception is how do you call it? USDA, which is the urban loans. USDA is urban loans, which is they only give it or is geared enticing people to underdeveloped area. Unfortunately, DMV
has to be the underdeveloped area.
Yes, USDA is not popular here, but maybe as you go certain part in, let's say, Pennsylvania, Ladysmith, King George, or even in Maryland, you go ask it like California, Maryland, certain part in Hagerstown and beyond now, then those kind of USDA, popular, and it has a it's a very, very good program. Zero down payment, no mortgage, insurance, and normally 100% down payment. What they do is that they have the first and second. They do first, which is it can either be 5% or 3%, and the interest rate is very competitive. The reason being is that yanime pe krum no fikrum na ko echiri kakra na
very brain ko.
Nti ano dia why adwuma no mienu no kra 1 year USDA say omo entase nkofo nti no omo lower bibia nso so. Jane dia 2 jobs 1 year will work. And yes, idea most lenders want to see you 2 years on the job. And I say we adwuma mienu no wa drop it back. And I was pick a second one. Even though the second one I'm picking in 2 years, because also you have a history of working 2 jobs, they'll be able to even use your new job, to give you credit. So the answer is yes, it helps. Okay. But under the description now, and as an example, mama is where it can be used.
Okay. Thank you. We'll follow up question here.
You're welcome.
Thank you so much. I'll be any question here. Vivian, what question here now? Still, I win in your idea.
If I told me, because
I wish that.
Mr. Magwana was doing.
Oh, David, me patch up means slow. Yes, S3 drew Papa my cranty. Yes, Mate.
Question never pass on me.
I'm saying this is next month. Anyway, sister Elizabeth, I'm so bad or man tem kakra. Shout out to you, Sister Elizabeth. Or say, may I know if it's a good time to buy a house or we wait? MC, I can't answer a crabby or had no answer. Until I make a sense of buy a channel. To the man, I shout out a crabby or na mini into us. You see, to see and I say, if
you're trying to, it's hard for somebody to predict what is going to happen. There's 3 things that I always say that is indications that you are ready. one, if usika semu eye, down payment and no closing costs. What you may see visika kakra da hwa, a little bit of buffer. We told them we are. So see more and I say or say first month mortgage I will be the whole be about 2-3 months savings be the whole. Now one, what discover a place it works for you as individual and answer your family. And answer third one, a product that works for you. Fear when you one. Then if you can check all these three, but most importantly, say usika semu jina nenaso na emotional, you'll be able to define your goal in this home purchase there. Then I think the answer is yes. And the reason why I know that this question is coming in is a lot of questions. There's a lot of people who are sitting on the sidelines. And I don't blame them because one, rate has been high. Two, a few prices have gone up. And now the consensus, I said, the beliefs that people think that home price is going to crash. And I said, rate is going to go down. And then you can't believe that your TF4 and you be who in the just last 2 months, and there's a lot of people who are back in the market now. Yes, people are beginning. I wrote a contract in Northern Virginia in one of the towns, and they just call me and say, so we have 5-6 contracts.
Hey.
And if any was listed for $450, Obama said no, somebody is offering $570.
Hey, excuse
me, $470. And the $470, $470, what they want to do, they said they don't want my clients to have an appraiser in place. Translation. Yes. If there's no appraiser, that means I said if your appraiser couldn't say if you need $455 and $460, that means my client need to give them free money.
Yeah.
You see, just because the rate started going down. Because from 7.5 to lower 5 to mid 6, that's a lot of savings. And so I can tell you, say, when you are ready, and most importantly, you can manage your payment. You can always refinance the home, just like any other loan. And everybody's situation is different, but I would tell people, say, if you are ready, go ahead and purchase.
Mr.
Go ahead.
My question are you ready? If my question here for Madam Biam and discuss now, me person me money answer. Or say he was approved for like an amount or debate to fee, but who is that amount no the man any less? Is there a way I'll bet me I'll try different places to see so more and I say what can we do about it?
But that's a very good question. The answer there can be it can be yes and no. Sometimes some lenders they don't get it right. And it has happened. I've gotten client in the past, it happens. They came to me, Alex, I've been qualified for X amount of dollar, but I have my bank. But do you have a suggestion? I said, okay, I can make a recommendation for you. And I've seen somebody, adding $50,000 to their purchasing power. I've also seen clients they've come and upon the due diligence from on part of the lender now, they also qualify for less. So
when you say 50,000 to their purchasing power, you mean from their own pocket?
No, that means
from the lender
and they qualify for like 450 and now they can qualify for 500.
500, okay.
And I got them the loan and they've closed on the home.
Now there are some who are been the other opposite side.
Yes, okay. Because it can be say ABR lender be one of my specialists will be a 10 and 9 ABR they are hitting you with all the deduction. But you also amount credit for some of the deductions. And they are not calculating your income, especially when they come to America. A lot of people are shift workers. They make overtime. Into one lender will say, overtime, up to date, I can only use X amount, 10,000 as part of your purchasing power. Another lender will say, so you know what, up to date, I can use $30,000 of your overtime. And those are the critical area. I see it happen all the time. That one lender will take all the overtime. Some lender will take a portion. Some lender will come up even with excuse the mintake.
Okay.
So, Mr. Duma, in that way, you can try other lenders to find out how much they will qualify you.
Of course. That is always the best, even apart from say, somebody qualifying you as a TF. They always want to encourage you. You always have to shop around. Even say your amount loan up a well, you have to get a second opinion to see say okay, because there are so many fees that goes into this thing, and that's why I always encourage people say, like Nana will say, getting somebody who is going to look out for your interest is very important. The truth is, I'm sitting here as an agent. Agents are not loan officers, but if you are blessed to have an agent who is caring and knowledgeable, who can also serve as an eye for you, it puts you on top, right? Because different lenders have different fees. And shopping around will let you avoid some of these unnecessary fees. And most importantly, nipa minimum na 750 credit scores. Baako sɛ mema 6 and quarter. Baako sɛ mema ABR 6%. Obi sɛ mema ABR 5.785. And it's open market. And I will say yes to that.
What's that? Let's say. Okay, Nana.
Yo, Michiawas.
So, then your friend says, I'm say business yabem. Or can you share light on buying foreclosure fix up? Your friend said loan as in investment and the best place to buy such homes. It's more of like buying foreclosure homes and fixing. Also, between share more light on about the loan terms, and I say beyond the best place be so be a start visa and find out be between start visa.
Oh yeah, I mean, it's a very good investment, and buying foreclosure homes and look at it's very good if only you learn it very well and do the right thing. Now I know I have one of my colleagues, Maryland. This guy not just residential, and we're taking it to even commercials. What partners are more apartment in and it's a very good thing. But I always want to caution, say, some of these foreclosure homes are unfortunate, there's open auction and closed auction. Some of them, if it's closed one, you are not allowed to see the home.
Yeah, you just buy it.
Yes, it's a blind bid. And you won't go feed them. It's just a putting small weddings. Until the mechanic say it's a good thing, but make sure say you get a second eye, know what you are doing. Because one here, Obeto, but by the time I fix baby name, either break even crowd there, you praise the Lord. But what about say you lose portion of your capital?
Yeah.
And that's what I would encourage, say, do some research, find people who can be like a second eye for you so that you don't run at loss. But if it's a open idea, open auction, dear, because if you are more advertising with newspaper man and as MLS, I'm gonna say, that's it. To make then get yourself an agent, and while you are going there now, when the nipa no, we you record the cry and we are for free. Also, the $100 brand. Or qua now I'm picking contractor. Say open bidder. That knows what they are doing. Not just say now the nako. Now what say if you person me bedi. Inti osha you estimate in your mind here. Or even say who are related so are not related no so or what time on to new echi. And as if address no man. Now on your research amount say if you we say a good condition and send a beton. And those things will guide you. So that you don't just make blind say me go to auction fee na or capital and it's a good thing. But there are more to it, but these are some of the fundamentals I think say when it guide anyone, it avoid any unnecessary losses.
Now, what about the loan side? No.
On a loan, yeah, it depend. Loan, no, most of the time, FHA loan cannot. You are not going to get FHA loan to do investment loan. You're not going to do that.
Okay. Yes,
most of the time,
for
yes, because they want the house to be in a condition where you can live in it. It has to be livable.
Mm-hmm. Yeah.
Into FHA loan, good. Anytime they are FHA and V now, when they go do an assessment of the home, they have a list that need to check to make the house livable. Into a house that is foreclosure that you are going to fix it up, forget it. So your only option is conventional loan.
Conventional loan.
Conventional loan. So if you are an investor there, then automatically you have to bring 20% to the table.
Because it's investment. Now, when you find thanks for the insight. Okay. Oh no, the other side is he found officers baby sana you fancy Potomac DC, Virginia, Maryland. Say baby sana say be away investment before baby sana.
Right. There's an wife flipper, right? Or flipping.
Yeah.
I mean, flipping, I can tell you for sure, so anywhere in this market, Northern Virginia, even the extension of it, whether King George, Lady Smith, Williamsburg, anywhere in Maryland. Yeah, so far as you are getting a good deal.
The good deal now, but you're going
to make your money, definitely. And there's no limitation as to certain area, no matter what is in that area. Even copper per crown when I can tell you that the most important thing is knowing that there's a value in it.
Mm-hmm.
Because remember, I said people live there. That's why in the first place that house was listed.
Yeah.
And making sure that you are buying it at a reasonable price, whereby you'll be able to make your 10,000, your 15, 20, name them.
Your friends say we say, thanks for the insight. Maybe your friends say you talk about the credit score. But the credit score annual credit report that comes to once a year, depending on your state. I'm saying at least I know say once a year, all the 3 credit bureaus between your credit, not the score, the credit information between you for free. And so per square you have to pay. What question be Anna?
O topic na na ya medena because I make a big craft. Mom kwandi.
Okay.
Sure.
Kakra your time na so bad e kuna. Question back we na feed that.
Sure, pa say when you are that na who educate you about my way. Mr. Beff, you say what you unim, obetimi akọ business school Okroma. Obetimi akọ the. Can't me Mr. Chambo Kaka, you enchire ho.
Yes, over form.
And na
Yes, over form.
This idea you are in the industry, you are experiencing it personally. On mechanics, but the mechanics of send an engineer, Juma, and connected together. You will not get it like Mr. Champo Bao. Immediately say advantage my community say take opportunity in share. That be said you Congress for no who say financial literacy Okroma microphone. You can illiteracy now. You no necessarily what school PhD you bitimi ko doctor and so and Mr. Champo kai they need any quite fast to navigate this part now. It's in illiteracy you school I cannot be illiterate. You can go to school and still be illiterate about something.
Of course.
Medan as say or take advantage no church issue. And then the BB cannot cut the effect the interest rate and the implication on the housing sector. Yeah, generally, Fed interest rate Fed because they have to balance so many different markets at the same time. And this is a bit technical, but I'll break it down. Over economics, you have different markets. Your market, your baby buyers and sellers, Asia interactive on the amateur. And in that different market, you have different markets. Like you find it's about labor market now. That's where you have employers and employees. Into employers no more demanding labor and I supply labor on the amateur. That is a whole market on it. And on the whole dynamic, the way it works out. and I'll buy your forest market or maybe a trade sika, right? A trade sika, a sika huja forex market and sika, sika. That is a whole market on it. It has its own dynamics. And your goose market, maybe koyokoto every day gross yokoto animal. That is another whole market. And no crown your car market, maybe a ton cars, right? And the dynamics is different, kakra. Oko goose market, dynamics is different. You have different nuances with all these different markets. Into third, when they are setting interest rate, their eye is not just on one sector of the economy. So they will have to set an interest rate that balances all this market and put them in equilibrium. In terms, it's a very difficult act and balancing act, and there will be any trade-offs. So you must be prepared to live with a certain trade-off and balance things out depending on your objective and what you want to achieve and which areas you want to prioritize, you want to focus on. And so, time and Fed raising interest rate. No, they didn't care about the housing sector. No, all they care was to balance, to keep inflation at bay.
Yep.
It's the whole housing sector. Impact they didn't care about that at that point in time. It's just one part of the economy on the amateur, and it had effect. It cooled down. And now, no focus. They are looking at something else. Labor market. They are looking at the labor market and the dynamics there and what is going to happen. And, they are trying to aim there. And try to play with that tool to be able to get some effect there in a way. They cannot always win all the time. But they will have to contain what they can live with in terms of, definitely but to be culture when you are comfortable with your culture and live with it, right? And move on. So, unfortunately and unfortunately for us, 10-year money market, money market, and it's another whole market. Money market, or once the dynamics are different. Money market, more big, 30 years, about 30 years. Oftentimes, it assumes that people take 10-year loan and then they give it to you into a 30-year rate and a 10-year rate, and they track very well together. If you want to see what is going to happen to 30-year rate, I always look at the 10-year rate. It gives you a sense of what is going to happen there. But the good thing, and they say rates now eco-feminine, it's going to have some effect on the housing market and outcome. It definitely have some effect there directly. In the sense, in economics, the cost of money is the interest rate you pay. Obviously, that's the cost of money, right? Whatever interest rate you pay. In effect, to make it simple, interest rate is the cost of the money you are borrowing, right? If interest rate is for money, say, the cost of money, in a way, is coming down for you, so you can borrow more. But even though interest rate is housing dynamics, it goes way, way beyond interest rate, and yet only interest rate moved anymore. There's a lot of supply issues, supply bottlenecks in our housing sector in terms of say ECC dynamics, because the supply side has to be available, right, and then it has to meet the demand. But unfortunately, America they've not been burdened at the rate at which demand and demographics. It's in the demographics of America for no or history be at Mr. Champo baby boomers, millennials, Gen Z. There's this whole dynamics about this population overlap and growth and some other things going on there, which has all played into some aspect, and historical like zoning laws. In terms of supply bottleneck, supply bottleneck, you cannot use interest rate to solve that. It has to come from the physical side, like a buying, and I said in where edging in a way. There's an aspect of Fed they can go up to a certain point, but they cannot solve all the problems. It's an interest rate probably do 3%. I can another 4%. Given what we know, so we are lucky something below 4%. Even if Bobby do 4%, you still probably have this issue of home, like the difficulty you have in the supply issue. It will still persist to some extent. In the next 10 years, I can guarantee you, based on that data, the housing sector will be very slow in terms of meeting up to the demand. It will build up, but very slow because burden in that market, the burden is not like, the car will be maybe 2 weeks, 3 weeks out burden on the plant, right? there's a whole, contractual process and like time lag room to be able to bring up a house on the amateur. And the labor involved. The first and so labor power. Getting people to even board, no, be employed in that sector, no, and also acquire something cacao.
So almost every cranny, you know, and cranny in the group. I want to see over there.
In some yeah. So it's interest rate in the like it's one angle to it, it's one aspect it will help, but there's a whole other big story to it that will have to come together to make sure we'll be able to meet. Service will be defense, don't know, so change my dime above them drastically, interest rate above them drastically. I'm sorry, sir. I'm not a financial advisor. They are making your advice. I don't have any license to practice as a financial advisor, but this is based on my own personal understanding of the industry and what is going on there. It is not going to come down drastically anytime soon. On the amateur. Na kakra na meka ediaso no Mr. Befi
that's it your insight. That's it. And for me friends then in Alex number no so atoanom said the maker no yemfa ba ko pebi wi na one end na mai krakra ne sen in your saba o say so utofia dey no also hwe interior and exterior. Then also we are now wabon to farmer na yedia abawi
Yo, and Madasminia, Sarah, good question. I mean, Utofia, I said the most important thing is the agent, Biana, Ebwa client, no, what to fear. You as the individual there, you are depending most of it on your agent and their leadership, which is we do home inspection, and the inspectors are licenses to come out to be able to say the quality of the home. The inspector will inspect roofing, foundation, HVAC. Those are the three major components, and everything else in the house to make sure say all these things are functioning properly. There's no any foundational crack. The roofing is not leaking, and most importantly, your HVAC also is in sync, it's working. And so those are the major things that the inspector will come and look at it. And then as a buyer now, you also have to also do your research, which is read. Because unfortunately, agents are not inspectors. And even if agents are inspectors, they are human beings, right? And so you have to read that because a lot of people, without necessary, they depend on the agent. And unfortunately, if the agent brings inspector who is not thorough, and there are different types of inspectors. And so if you are also going to hire inspector, and I say your agent is going to hire inspector, there have to be inspectors who are going to be thorough. Because some inspectors shabby job. And I say, can it be said some agent, maybe an inspector officer or bar, I'm an agent, but to say I'm gonna make the deal for them. So because inspector never know but say we are definitely it's going to come to the hearer of the buyer. And the buyer must say if you need right? And you know, say, you the buyer, you have the right to select your own independent inspector. You can go, it's not me and any agent. Where you want to say you're provided with one. But every good agent who are there, there are multiple inspectors. When you ask them, they're always going to steer you. You just have to hope, say, those inspectors now inspectors are, your agent is going to lead you, they are good ones, and not people who are going to cover things. But most importantly, you, Virginia, now, we have what is called in our books, your friend, buyer be aware. Before then, we used to do what's called disclosure. You have to disclose every material fact. So, obi to only fear. They have to let the agent know so that the agent will put it in writing. But since 2014, now much be aware. You have to be knowledgeable. In addition to, most importantly, your relator. And then hoping that the inspector also will come to do what is right. But Maryland is different. Maryland have that law. The state to protect the citizens. Nti bibia akoso ofie no bia na the seller is aware na they need to disclose it. Nti de bia no mutual contract mango for Maryland am tumi say de bia no disclosure bu 10 pages upon pages. In fear PTP nyoma have they have to disclose, because in Maryland no when disclosing any panic come next who a say it was something that conceal a bit miss you. It doesn't mean that Virginia cannot sue. But Virginia, no, there's a law that protects the seller. So who better for you, no agent, and no inspectors, when you due diligence. These are some of the things I would say, as buyer, no, you have to do. And I say, make sure say you select the right person to represent you in this transaction.
Yo, for I'm say na ade na yɛ this na your time no ayɛ na yɛ mantem kra mo fanche mo so mo mrantem kakra program is started 7 at least 7:15 there ya na yɛ hyehyɛ ha no anya no ko a yɛ da nua Alexa say ne number no me fan to hobiem number no ni 703-577-0872 said in America no. So what you ready? This is not the time. Maybe started no. At this point, see, so what the work crab share, team say few years, real estate system na change to he'll be our experience. Here and I say yes, I can be in class say no inspection cyber beam no. It he'll be our experience. It so yeah, get in touch. Now they were call and say sometimes just on the book or so the question be a crana. What the manner obeboa ti ya make sure say a dine sem ni ade ye na wo bi a get in touch no more na your community sometimes you call alone na the nyama bebre ba na ha ene no kwa na ye ka open more content finance stuff call YouTube channel so more content and every third week of the month this week near will be na the bar ending of the month, usually a third week of the month and you have for housing other financial stuff so our YouTube channel or Patrick Berfi obinya information about finance a bit me about me also get in touch at 703-981-1910 will be our financial questions we have say we get in touch means my number I'll be to get in touch. I would say make sure you spend wisely, save intentionally, and give generously. Shout out to all of you. I'm buying Brefi, Sophia, friends say, I don't know, sorry, Vivian, Edin Kakrabiti Kaka, also Elizabeth, and next month, third week, and every Monday be a Fusikasem program, until we meet again. Hala. See you guys.